In 1694, a 23-year-old Scottish gentleman named John Law killed a man in a London duel. He escaped prison to avoid the hangman's noose and spent the next 20 years as a fugitive gambler on the continent. Law possessed a savant's ability to calculate complex odds in his head, amassing a fortune at the tables of Europe long before he ever touched a national treasury. By 1716, France was in a state of total financial ruin. King Louis XIV had just died, leaving his 5-year-old great-grandson on the throne, and a country utterly depleted by decades of relentless warfare and royal extravagance. The national treasury was completely empty. The government's debt had grown so massive that the interest payments alone consumed almost all incoming revenue. Credit vanished, and day-to-day trade ground to a halt. The regent of France, desperate to keep the state from collapsing, realized that borrowing more metal wouldn't work. The nation required someone willing to entirely rewrite the basic laws of how money functioned. Global money meant physical metal. To grow, a country had to dig gold and silver and stamp coins. But metal couldn't expand fast enough for a growing population. Currency became scarce, prices dropped, borrowing stopped, and the French economy suffocated. Sitting at the card tables, John Law observed how betting chips and IOUs flowed easily between players. He realized that money didn't need intrinsic physical value. Money is simply a tool for facilitating trade. He theorized that currency didn't have to be heavy coins. It could be lightweight paper, backed entirely by the shared confidence of the people using it. By treating currency as a psychological agreement rather than a physical commodity, Law outlined the exact mechanism that powers the global economy today. The desperate French regent decided to let the gambler test his theory. In 1716, he granted Law permission to establish a private bank and issue his paper notes. The bank held real gold, but Law printed far more notes than he had metal. He relied on probability that customers wouldn't demand gold simultaneously. To ensure demand, the state decreed citizens could pay taxes with notes, giving the unbacked paper real-world utility. The result was instantaneous. With an abundant supply of fresh paper currency flowing through the streets, businesses secured loans, merchants bought goods, and the paralyzed French economy surged back to life. Law had taken a broken national economy and restarted it, entirely by hacking human belief. Emboldened by his success, Law aimed higher. He established the Mississippi Company, a massive commercial enterprise designed to absorb the entirety of France's national debt in exchange for exclusive trading rights in North America. This is a map of the French territorial claims from the era. Law pitched the Mississippi River Basin as a paradise of limitless wealth. The reality was a few struggling settlements, but the sheer scale of the wilderness made his extreme projections sound plausible. Then, Law merged his central bank with his trading company. He began using his government-authorized printing press to print massive amounts of paper money, which investors immediately used to buy shares in his company, driving the stock price higher and requiring even more printed money to keep the cycle going. The street outside Law's office became an open-air trading floor. Aristocrats, merchants, and servants shoved past each other in a frantic rush to buy shares. The mania generated so much overnight wealth that it spawned a completely new word in the French language, millionaire. By early 1720, the market value of the Mississippi Company reached an estimated 6 billion livres. That was roughly equivalent to the value of all the physical land in France combined. A single trading company operating entirely on speculative paper and an unbacked money printer had become the first modern financial bubble. The illusion shattered when a royal investor, the Prince de Conti, decided to cash out. He arrived at Law's bank with 3 wagons and demanded his paper wealth be converted back into physical gold. Other investors quickly realized the math didn't add up. Fractional reserve banking only functions when people trust the institution. Once that trust fractured, everyone rushed to the exits at once, demanding metal that didn't exist. Within months, the share price of the Mississippi Company plummeted by nearly 90%. The paper banknotes became entirely worthless, and thousands of families who had traded their tangible businesses and land for paper lost everything. Law's machine ran exclusively on collective psychology. The second the public stopped believing the paper had value, the wealth evaporated into thin air. The collapse was so devastating that it left a permanent psychological scar on the country. For the next 150 years, The French government actively refused to use the word bank in any official documents. Burned by the illusion of paper wealth, French citizens retreated to hoarding physical gold and property. This deep-seated suspicion of financial innovation heavily restricted France's economic development throughout the entire 19th century. As for John Law, the regent allowed him to flee the country for his own safety. The man who had briefly controlled the wealth of an empire spent his final years drifting through Europe, eventually dying broke and forgotten in Venice. Yet the greatest irony of Law's life is that his underlying theories about fiat money, fractional reserves, and central banking were undeniably correct. Every major currency in the world today operates exactly the way John Law envisioned. He built a perfectly functional financial jet engine. He just tried to fly it 2 centuries before anyone had invented the regulatory brakes.